Hey everyone, and welcome to the DeFi Drop. Today's drop features Mehdi, co-founder and CIO at TUYO Labs, the development company behind Yo, the yield engine for the crypto economy. Thanks for joining us.
Thanks, Edward. It's a pleasure to be here.
It's great to have you.
That's awesome.
So, Mehdi, please could you give us a bit of background about yourself?
Yeah, I went to business school twice to learn about finance from like the ground up, like the financial theory and risk and so on. I started my career in investment banking. I was in Credit Suisse in 2008 during the great financial crisis, which taught me a lot about risk and about exposures. I also went on to work at the World Bank to do frontier investing in Sub-Saharan Africa and Latin America. Those years were great years to learn about financial theory, about how to structure things in ways that are like strong Lego blocks. I got the chance to also work at Uber and become a like kind of an entrepreneur by launching Uber Eats in London and working at Cloud Kitchen in LA, following Travis in his second pursuit.
Casual drop about founding Uber Eats.
Uber Eats was a pretty phenomenal time, and I would love to talk about it. I actually like posted a blog post about how Uber works and how Uber does things so differently, and that was like a phenomenal time because we saw like a unicorn being born just out of Uber Eats London within 4 or 5 months. But that was because like the setup of Uber was so good because we went to market with something that was incredible, which was like 30 minutes or it's on us. Basically, if you receive your food within more than 30 minutes, we pay it back to you. And so it just created such a viral loop that it became like it took 60% of the market. We took a large part of Deliveroo, and we grew the market as well because people started to order much more and got used to it because it's Pavlovian.
So I was living in London actually when Uber launched, so the taxi service. And I remember the hesitation of downloading this app and then my friends pushing it so they could get £20 referral. And then I pushed it to friends so I could get £20 referral. But then this, who's picking me up? Like, how's this work? And then you see this car moving along the app. I remember how amazing it was, right? And I think, stop me if I'm wrong here. So London must have been one of the first major cities
Was
to
and
launch. Yeah. And then I remember obviously Uber Eats coming in, and I had already seen Deliveroo right everywhere. And there was also a few other competitors who just got eaten up quite quickly when Deliveroo and then Uber Eats came in and just like took over.
Deliveroo were really good at execution, at bringing the best restaurants and signing exclusives. And we were basically Uber Eats at that time was a dying project within Uber. It was just like a moonshot that didn't really work. And London was the last city that we were going to try. Otherwise, we were going to shut it off. And so when the Uber Eats mini organization, our team basically told us, do whatever you can, do whatever you want. This is it. This is the end. And so when you are put against the wall like this, you really like try to, as an entrepreneur, try to solve the problem. And so we tried everything. We used all our budget for the year within the first 2 weeks. And we went with this idea that what do people want? People, when they want food, it's already too late. They're already hungry, so they want it fast. And the other thing is they want good food once they're done. They want to have had good food, otherwise they are not going to come back. And so we only focus on the very best restaurants. So whatever you pick up in Uber Eats was basically curated, and whatever whenever you order, you get it super fast. So everybody understood that Uber Eats was the fastest, was maybe not in fact faster than Deliveroo, but the idea was that that was the value prop that we were betting on with the 30 minutes or it's on us.
It's amazing that you've actually been part of the launch of such a big business, and a business that everyone can relate to pretty much who lives in a city.
I got lucky on that.
Well, you've got to make your own luck, right? So
Yes.
anyway, I would love to talk more on that, but actually
With
we've
Yo. So we
yeah,
don't.
we've got a bit more excitement ahead actually with your new business. So perhaps you can kick things off about Yo now in your own
Yeah.
words. Maybe tell us a bit more. But from what I understand, Yo calls itself the yield engine for the crypto economy, as I already mentioned at the beginning. But how do you explain Yo to someone who knows DeFi but hasn't tried automated yield optimization before as well? So yeah,
Yeah.
intro about Yo and then a bit of Yo's story, and let's get slightly granular as well in that question about automation.
So just like Uber Eats, when we launched it in London, we go with this idea that whatever yield touches should be really good yield, very good DeFi yield. And so we start with this idea that DeFi yield is actually the best yield that exists when it is battle tested, when it doesn't have counterparty risk. And we want to build something that is really simple, where you don't have to bridge, you don't have to like do difficult transactions, you don't have to spend too much time assessing all the types of risks around the protocol. And so Yo is basically today a simple high yield savings account based on DeFi yield. That's basically the way that we want to construct it in terms of how it looks as a product. And the in order to achieve that, we have to have behind under the hood the first vault that is actually multi-chain, that is actually getting yield across multiple chains and bringing it to you wherever you are. We have started with Base. We are also adding Ethereum in terms of like entry for the vault, but the vault is actually like on all other EVMs and getting the best yield in DeFi.
Awesome. Thank you very much. And so a bit about how it works. So Yo tracks yields across all these chains, right, that you mentioned, and these other protocols. So perhaps we can get to the core of the problem, which you set out to solve. So manually chasing yields, it's expensive, it's chaotic. What really motivated you to eliminate these pain points when you were designing Yo?
Yeah, when we were uh, talking with users and until today, this idea of chasing the yield is actually painful and hard. Even if like uh, in the industry we got used to it, of like looking at yield on DeFi Llama, looking for new opportunities, getting excited, moving, bridging, doing all that work. A lot of the time, people are actually missing out on great yield. And what we think should have happened is a way to basically have one vault, and that would be just the one vault that actually allocates to the best yield over time and continuously. And so in order to do that, we need to have a system that not only like knows where the yield is, knows how to go and get it, basically have the path to bridge and then invest and then divest and all of that, harvest the rewards, but also we needed to understand risk-adjusted yield. And so that part was something that is much harder, but we make it very, very simple because we are basically using, we built as a team the exponential risk ratings, which are extremely good at predicting the risk of loss of principal on a pool. And so we have a 4-year track record on that risk framework. It is really helping identify when a smart contract or a protocol is not built well, it doesn't have the right incentives to bring that yield, that yield doesn't make sense, and take out all the parts of DeFi that are not actually pure DeFi or not actually doing providing good sources of yield.
It sounds like your vision, your mission is really similar to ours at Portals. Our real mission is simplifying user experience to finding and accessing the best yield, right? We ultimately want to do that. And we're really on the same wavelength there.
That's the way that we multiply this the size of DeFi by 10 and 100x. And something that actually I find surprising is that DeFi is basically 1% or 100 times smaller than crypto. And I don't think that that should be the case for a long time. And we need to look at what are the causes of that. And it's probably the fact that the UX of DeFi is hard. If you try to take anyone who has a crypto wallet and tell them, oh, just get some yield on it, you're going to see that they struggle a lot.
Yeah. So on your model, on your risk adjusted model, just to reiterate, so the decision making flow around that, around the risk adjusted yield, is the prediction. That's your flow.
We assume there is a kind of a prediction there, which is the last 7 days and the last 30 days are a good predictor of the next 7 days and next 30 days. But it is just an assumption, a heuristic that is being used actually to define where the algorithm allocates.
So you're consistently rebalancing across multiple chains, okay? And perhaps we could understand a bit more about the multi-chain yield engine and how it technically operates under the hood. Let's go in this direction. What sort of signals or threshold triggers a reallocation, and how do you ensure this doesn't create unnecessary churn and slippage
Yes,
or gas costs?
absolutely. So it does not like the algorithm does not rebalance all the time. It actually the most rebalancing is done through deposits and withdrawals. So when a new deposit happens, it allocates to the best yield, and when a withdrawal happens, a redemption, we redeem from the least attractive pools. And so that way, everybody who is sitting in the vault is benefiting from like this optimization that is happening over time towards like a more optimum yield. Um, that's not enough because withdrawals and redemptions are not for most of these like investors who are like thinking of it as passive investors. There is not so much deposits and withdrawals. So we also add almost like an electric shock on a weekly basis where we just have the algorithm trigger a rebalancing based on like the new volts so that we keep that optimized. By doing this, we have really strong scale effects in the sense that we don't there is no need to pay for much gas or much slippage, all of that, because it is done once a week for everyone and all at once. And so that's really a strong benefit for users, where you basically pay much less costs than if you had to do it on your own.
It's very clever, and you're not the only people moving in this direction. I think there's quite a few players now. How do you compare to other vault solutions that provide yield, and why is algorithmic allocation important?
Well, when we look at all the vaults, most of them are actually based on curation of and based on human intervention, and so we try to be as far as possible from both human curation and both human trading or intervention. The reason we do that is that we think that DeFi and crypto is based on the idea that all of these assets are commodities in the sense that they are not securities. And if you take the Howey's test, one of the key components of not being a security or of being a security is that there is the intervention of people who are creating the profit. And so if you think about it, and you have humans creating, curating a vault and creating the origin of the yield, well, there is a question mark whether these are securities. And we think that right now we're benefiting from the gray area, but at some stage there's like the core question is going to come in. This question doesn't come in if everything under the hood, every vault and pool under the vault is a commodity or is automated or is a contract that is predetermined in a way that is algorithmic and it is verifiable. And so what we want is we want to focus on this pure DeFi, pure aspect of DeFi, where DeFi things are decentralized, things are algorithmic, things are transparent, and where everything works through the power of mathematics and code, and where there is like no human intervention, so that in 5 years, in 10 years, when regulators come in, they don't find actually humans make at the origin of the yield or at the origin of profits.
No humans.
That would be great. I
Yeah.
like that. Humans as people who benefit from the yield, not as people who
No, I get
generate.
you. I get you.
The way I look at it is that there are three revolutions, in my point of view, in terms of like machines replacing humans. Obviously, there's robotics, there's AI, that is like the biggest one today, where compute is replacing intelligence. Now, like the third one, I think, is blockchain is replacing intermediation. And so what before you need a banker to look at your counterparty risk, look at your credit score in order to assess whether to invest or not. It is replaced by Aave having just like a listing system, and then you have peer-to-peer lending with secured collateral. And so I think that that's much more efficient. That's a source of yield, that creates yield. And so this level of productivity is incredible. And that's why I want to work on this space where we are bringing a good source of yield to actual humans.
That's a great way of looking at it. And we're getting there, I guess.
Yes.
And it won't
Yes.
happen. Won't happen
Years.
too slowly either. Yeah. So let's move on to risk. Okay. So despite hundreds of pool exposures, no one actually has lost any money on Yo so far. Okay, which is great. And how do you explain that?
Yeah, I would say that even so, we built Exponential 4 years ago on the risk ratings, and we built TUYO a year ago, and no one has lost money. No client of Exponential has lost money ever, and so that's like a phenomenal track record on DeFi. On Exponential, we had uh, hundreds of pools that were investable. On Yo, again, we have more than 100 of pools that we have listed. I think it comes down to having a good understanding of what creates most of the risk in DeFi. Most of the risk in DeFi is created around this issue of asymmetry of information. I think that people, if you look at a protocol like Curve or like Uniswap or like Aave, you can study it, you can understand, really have a good picture of what is in there. And so the risk ratings of Exponential are today the best predictor of loss of principal. And so we are able to avoid a lot of the things that are actually not good, that we think are kind of deceitful.
You're very clear in everything, and you emphasize a lot about transparency, which is endearing because that's what we love, right? So I guess you emphasize transparency so users can always see where their funds are deployed. Okay, it's important in yield aggregation. We know that, but do you think the rest of the industry is moving towards more transparent real-time allocation reporting like you guys are?
Well, I am someone who likes to see change in the world, and I think that's something that's like everywhere in our team. We want to set the standard, and so with Exponential, we set the standard for transparency. We set the standard for risk, where a lot of protocols, in order to have better risk ratings, had to change. They had to close the background doors. They had to move to multi-sig or move to immutable contracts, and that is something that's great. And I think like that's the same idea that we have today with transparency on Yo. We think that we're bringing a higher standard in many fronts in terms of like how things should be, how DeFi yield should be. One of the ideas that we also have is that DeFi should be pure of counterparty risk, because counterparty risk is deceitful. And so we don't have, we try to avoid all pools that have counterparty risk, like the ones or that have opacity, because that opacity creates an asymmetry of information that creates incentives for deceit. That's something that happened with Stream, for example. Like we were looking at Stream, and it was such an attractive yield, and they had such an attractive TVL growth and so on. But there was opacity there, and we couldn't even get in, even if we wanted to. Like we couldn't list that because the risk ratings would show it as an F or a D, or which is basically like a dangerous degen or a failure to be. So D's and F's are that, and so that's basically what we stand for.
That's great. Perhaps we can actually expand a bit on, or talk a bit about how people actually lose money in DeFi. You've been in it for a while now. It's probably useful for people to understand where these risks lie. It happens unintentionally a lot of the time. People aren't sure of what's going on. Maybe people lack experience, and also there are far greater powers at play, even for the most experienced. But what do you think needs to change in the industry to be more investable?
Yeah. No, that's such a good question, and I think like the important part that is almost annoying me in a sense is that DeFi came in as the promise of something that is like the strong Lego blocks of the future of finance, and Lego blocks that are supposed to be composable. They are, but are also supposed to be rock solid. And so that's not necessarily what we see all often. We see a lot of things crumble. The good thing that happens is that when things crumble, there's very little interdependency so far. Like we have seen Stream, that had Elixir, and I had a few others like YieldFi, but it's not. It's typically like Lego blocks that are independent. They didn't affect Uniswap or Curve, and that's a good thing. Now, the part that is actually really hard is and annoying is when DeFi, decentralized but centralized in the middle, happens. DC, it's fine to have CDeFi like Morpho is doing, where you have centralized in the front with Coinbase, DeFi in the back. But the moment that you flip it and you have decentralized in the front but centralized in the back, when there is DeFi, we consider that deceitful, because basically DeFi is deceitful because it's pretending to be something that it is not. It's pretending to be decentralized, but it cannot be decentralized in the front and centralized in the back. That's not just something that's not possible. And so when we see DeFi, and we see a lot of it, we see a lot of it with every time that there is like lack of transparency. We see it every time that we see uh, uh, people say, "Oh, I just have an MPC in the middle because it makes trading easier." Well, trading is really hard without an MPC, but it should not be an MPC, because the MPC, which is like a security system that is made for hedge funds and funds that want to invest in DeFi and crypto, it doesn't work for DeFi because the security system is not open to the public. And so, whereas like a multisig like Safe is open to the public, everybody can verify how the Safe works, and so that it is actually important to have full decentralization and full transparency across the full chain of value from the yield source to the protocol that is providing it. And so I would say the core thing that we need to change in DeFi today is to really separate pure DeFi, the Aave, the Curve, the Uniswap of the world from DeFi, which have centralized in the middle, like Stream, that is going to create centralization risk and counterparty risk that we cannot even assess, even if we are experts, because that risk is off-chain.
Thanks for your view on that. We've come up on this topic a few times, and it's great to hear your perspective. I think that's very, very interesting. And of course, recent events bring this to light, right? And of course, you guys are doing what you can to set this example as well. You're also seeing strong adoption via integrations, aren't you, at Yo? I came across TUYO wallet. What are the most common integration use cases that you guys are seeing? Like wallets, dexes, front ends? Who benefits the most? What kind of performance uplift do partners typically see?
Well, I want to give a shout out to TUYO though, because I think that they have built the product that I think need to be built. And in terms of wallets, it's really rare to see a wallet that is as simple as TUYO and as intuitive, but also has a credit card that works in every country, including like jurisdictions that don't want crypto. And so I have a lot of friends that I'm onboarding and like telling them about this, and they are so excited to be able to have their USDC usable with a Visa card. So to me today, a wallet should have two things on top of like simple custody and self-custody of assets. The first one should be like obviously a credit card, but the second one is also a way of retention to keep the users is a yield source. And so you need as a wallet, you need an earn section. And Yo is basically building the best savings account or the best way to get to those yield sources. And we want to create like user experience, which would be like one click from USDC to Yo USD, one click from USDT to Yo USD, and so on, one click from your Bitcoin to Yo BTC, yield optimized BTC. And so that's basically what we're building. I am very happy to see that TUYO showed the example with a native integration. Native integrations are so much better in terms of UX than like integrations through a browser, like you would have on Base Wallet or on Binance Wallet or things like that. And what we see is that both for in terms of impact to the users, is that once you build an integration in a way that is native, it has much more impact, more than a 10x impact compared to the one through a browser. And so just people love native and want to feel the interaction that we got used to on iOS or on a mobile app, not the interaction that we have with a web page. Is interesting.
I totally agree with you. And also, I'm going to spend more time using TUYO wallet.
Yes.
We'll definitely spread the word. So, Mehdi, yesterday, or I think this week at least, Yo Gold.
Oh yes.
Let's talk a bit about Yo Gold. I'd like to know as well, while you're on this subject, what else lies ahead, exploring new assets as well, new types of pools, LRTs, RWAs, perps, all of that. But yeah, let's kick off with Yo Gold.
Well, we love to push the frontier, and we love to start with users. And if you think about users today, they want to have a few things in their portfolios. Obviously, they want their stocks and they want their bonds. We think that your USD is the best form of bond because it gives you like double-digit yield without counterparty risk from things that are like not good. They want to have Bitcoin and ETH and Solana. And so we are building YoSol. We have already yield optimized Bitcoin and yield optimized ETH vaults. The thing that they are also wanting nowadays is gold. A lot of people want to have gold. And so we added these basically. We were like, okay, where is yield on gold? And there are not a lot of sources of yield on gold, just as it is the case also on Bitcoin in a sense. What you can have is a little bit of market making yield between like two forms of gold, like Pax Gold and XAUT. the Tether Gold. You could have like yield from like people who want to swap basically between these two, but it's not such a big market today in terms of volume. And you could have it as secured lending for people who want to short gold, but not a lot of people want to short gold nowadays. And so therefore there isn't like so many yield sources, and we had to create something new. So we don't like to actually create anything in DeFi. We don't want to be in the business of sourcing yield or like creating a yield source. We just want to give access to things that already exist in DeFi. And so, but we went ahead and we were like putting together this idea that you should have carry trade on gold. And what we did is we started to talk to the best people who can do it in terms of like infrastructure, curation, and all of that. And we brought in a team between Clearstar and IPOR. IPOR has the infrastructure for the carry trade, and Clearstar has like the knowledge of like managing that carry trade. And so we put them together. We told them like let's do this, and let's create a new yield source for gold, and we plugged Yo Gold on top of it basically, and that's basically how we launched.
That's really, really interesting. Congrats on launching it.
Thank you. Yeah,
Really, really
it's a
congrats.
fun thing. I think gold is being disrupted by Bitcoin. But the disruption takes a decade, and so it's okay. You can have both. You can diversify your portfolio. We don't want to get too much into the philosophy of this. I don't have gold. Now I have your gold, but I didn't have gold before this, because to me Bitcoin moves 5 times faster, and so it was doing a better job than gold itself as an inflation hedge.
And when did pre-deposits open for Yo Gold?
Just 24 hours ago.
Literally, it was, wasn't it? Yeah,
Yes,
because we're going to support the position on the Explorer at
that's
Portals.
awesome.
Yeah,
That's
and
awesome.
that should be done, I think, today.
Thank you.
Yeah. All right. Cool. So Mehdi, it's been great talking to you. I've really, really loved it. I wish we could chat for longer, but I tried to keep these short and let you speak as much as possible so I don't waffle on, because this really is about you and Yo. We always end with a question, which every speaker gets. It's a bit of a game. The total TVL of DeFi, as per DeFi Llama, is $123 billion today. Okay. What's your prediction for this number at midnight on the 31st of December 2025? So, New Year's Eve. It's around 3 weeks away, 4 weeks away.
I would say 3 weeks from now, we're basically 25% more or 20% more. So you said 140
It's
billion?
123 billion today.
123. Yeah, I would say it should be 148 billion.
148 billion. Nice one. Well, three days ago it was 114, I think, or 111. Yeah. Okay.
Yeah, I'm hopeful. I tend to be more bullish than like most people all the time, but that's my bias. I'm just optimistic. And I think that we have a comeback to do. There was no reason for all the pain that we went through. I mean, in DeFi we had some reasons. We had like Balancer and Stream and a few
Stream. Yeah.
others. But in crypto we did not. Crypto is just like the market being the market, and people expecting a certain cycle, and just fear being there. And I think like there's no real reason for this to be the end that people are believing in.
Yeah.
But let's see.
Do you think there was some coordination?
I think that coordination, there's always coordination on the markets, in the sense that the shorts coordinate and the bulls coordinate, in the sense, without even like knowing that they are coordinating. It's just people talk and so on, and they want to get together into their same point of view. Um, I think it's more about just macro things. Like we at Exponential, we're looking at it as well, and we realized that there was also just the yen carry trade unwinding, and that kind of thing is a very structural change that can divide the market by two, the stock
Yeah.
market. And so we in crypto tend to move faster, earlier, and more than everything on the traditional market, because we're 24/7, because we have a lot of people gambling and levered, and because just people act faster, it seems. Obviously algorithms act as fast on both markets, but just like crypto is super fast, works on the weekend, works 24/7, and so there's a lot of
But
sentiment analysis that works there.
the thorn in our side,
Yeah.
because of all of that, is impatience, right? So you see, and impatience is arguably your worst enemy when in this game. So yes, we'll see how things pan out. I'm also optimistic for the short term. I'm very optimistic for the long term. But Mehdi, it's been so good having you on. I could talk to you forever. I think everyone could listen to you forever. It's words of wisdom. You've got a great story, and we're very lucky to have had you on the podcast. We're also pleased to be working with Yo and can't wait for our relationship and partnership to develop through Portals.
Oh man, the pleasure is mine, and I hope to see you soon in Portugal. I would love to see you in person as well.
Yeah, let's meet up. Let me
Yeah.
know when you guys all move here.
Yeah, we as a team are moving to Portugal in February or March. We want to spend a year working in the same place, co-working. We have done a lot of remote working over the past few years, and we missed the time where we were all together in San Francisco. And so we moved from San Francisco to remote, and now we want to go back to in person.
That's fantastic. I know you explained that to me before the pod, but I really think this is so cool. And the fact that everyone's agreed and everyone's flexible enough in your team to make this move, it's fantastic. I love it. And I can't wait to meet you guys.
Yeah, I am very grateful to the team I have today. They're the best.
Awesome, Mehdi.
Thanks,
Thank
Edward.
you so much.